Hello traders, you're welcome to this video and you are welcome back to the Forex Geek channel. All right, if you are not yet subscribed to this channel, then you are missing out because we cover a lot of insightful topics on this channel. We cover trading indicators, trading strategies, reviews of Forex related platforms. So you have a lot to gain in this channel. Okay, so if you've not yet subscribed, then I think now is the best time to do that. Now let's just get right into what we have for this video. Right, in this video we are going to be covering Bollinger Bands and Stochastic Oscillator. We're going to be looking at a strategy that combines these two indicators. Okay, so if you are looking to elevate your trading game, just know that you are in the right place. Okay, so first of all, let us talk about Bollinger Bands. All right, the Bollinger Bands we are created by John Bollinger. Let's just add the Bollinger Bands to our chart right away. So this is what the Bollinger Bands look like. It was created by John Bollinger. These bands consist of a middle line. The middle line is a simple moving average, and then also consists of two outer bands that represent price volatility. Now, when the price moves close to the upper band, it indicates that the market is overbought, while touching the lower band suggests that the market may be oversold. Now, as we can see, whenever price gets to the upper band, there is always a reversal or a pullback depending on the direction of the trend. For example, this is a bullish trend. So in this case, it's just a pullback because this is a bullish trend. In this case, it's a pullback. This is a pullback because it is a bullish trend, right? While the price getting towards the lower band indicates a pullback or a continuation or a reversal depending on the trend as well. Because since this is a bullish trend, it means price getting to the lower band is going to indicate a bullish continuation, a bullish continuation, a bullish continuation, and so on. If it was a bearish trend, the reverse is going to be the case, right? So this is a bearish trend. When price gets to the upper band, in this case, it's representing a bearish continuation, okay? And when price gets to the lower band, it indicates a pullback because this is a bearish trend, all right? Now, using Bollinger Bands, traders can gauge market volatility and identify potential reversals. Okay, so if you see price action touching the outer bands, it might be a signal to look for a potential entry or exit point. Now, let us move on to the stochastic oscillator. Okay, I'm just going to be adding the stochastic oscillator to the chart. All right. Now, the stochastic oscillator is a momentum indicator that compares a particular closing price of an asset to a range of its prices over a specific period. Now, it generates values between 0 and 100, as we can see here, all right? Now, typically, a reading above 80 indicates that the market is overbought, while a reading below 20 suggests that the market is oversold, okay? This helps traders identify potential reversal points. Now, when used in conjunction with the Bollinger Bands, you can get a clearer picture of market conditions. For example, in this bullish trend, we can see that when price was bouncing off the lower band, indicating bullish continuation, during those periods, we were getting confirmations from the stochastic oscillators as well. You can see that when the stochastic oscillator enters the oversold territory, it indicates a buy signal. So when you have the main line cross above the signal line, it shows you that it's time to buy. So that was an additional confirmation to what we had from the Bollinger Bands. Now we have multiple examples. We can see here again, we got a buy signal as price was tending towards the lower band of the Bollinger Bands. We can see here again, right? So the stochastic oscillators give us signals about overbought and oversold regions, even though they, in this case, in the case of stochastics, there are specific zones on the indicator window, like the 80 zone above, the 20 zone below. Whereas for the Bollinger Bands, it's just when price gets to the upper band that you know that the price is overbought, and when price gets to the lower band, you know that price is oversold. So when you combine these two indicators, you can get an effective trading strategy, although profit is not guaranteed. Okay, it's very important to know that. The best part about using Bollinger Bands and the stochastic strategy together is that they complement each other beautifully. When the price is touching the upper Bollinger Band and the stochastic is showing overbought conditions, a strong signal to consider selling. Conversely, if the price touches the lower band and the stochastic indicates oversold, it could be a good time to look for buying opportunities. Now, to put this into practice, look for situations where both indicators align. All right, it's always a good idea to confirm signals with additional analysis or other indicators to ensure that you are making informed decisions. All right, you can even set alerts on your trading platform to notify you when these conditions arise. So there you have it, an overview of how to boost your trading skills using the Bollinger Bands and Stochastic strategy. If you found this information helpful, please give this video a thumbs up and remember to subscribe for more valuable trading insights. Your support really helps us create more content to help you succeed in your trading journey. Thanks for watching, and I'll see you in the next video.